What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief, and this episode is the weekly recap. It's going to be a little bit different than usual. We're going to be bringing in, I believe, 8 to 10 different stocks coming in that I am personally looking at from a long perspective. So I'm excited to show you those. But we're going to be starting off looking at the indices first. This price action has been absolutely crazy these last few trading days, so it's very confusing. Like, are we going through a melt-up phase right now? Is this a period of distribution, a crack-up boom? What's going on? Well, we're going to look at the charts, and then we're going to hop in to the power chart section where we're going to go into specific trades that I have my eyes on. So let's just go ahead and get into it. All right, welcome back. We're going to start off with the VIX, okay? The VIX Friday crushed down to the downside. It did break out of this falling wedge, so there's still the possibility, right, from a bearish point of view that we can head higher here. Just notice the just crazy price action just swinging back and forth here. And as while this is taking place, the Bollinger Bands are still very, very tightly contracting here. And we've talked about it in previous episodes where we get these tight contractions in the Bollinger Bands. They can lead to some explosive moves in the VIX. So something to just kind of keep an eye on there. As far as key levels, 20 is still that level of resistance that my eye is on. And then we have the lower Bollinger Band right here at around 1545. That can act as an area of support as well. So we'll be keeping an eye there. From a weekly perspective, we have a little hanging man candle up here, on the S&P 500. And we pointed this chart out in more detail on a previous market brief. I just wanted to call out we're overbought here, and we're still at the upper range of the upper Bollinger Band, and these patterns are still holding true currently as we speak. Now, from a daily perspective, I want to just call out this slight negative divergence here that it may come into play, it may not. And you can see the price action, how it's been just this rough ride here, just a couple red days, then green day right back, then red day to reverse it, then green day to reverse it. So it feels like a lot of distribution, but overall context is bullish, so we have to give bulls the benefit of the doubt here that they are still fully in control. From a 30-minute perspective, we talked about this broadening wedge, megaphone type looking pattern. When it cracked down, it back tested it, got rejected, and then look at this, we came right back into it, and towards the close of Friday, we had some selling pressure right around this area of resistance. Will that continue? It's very possible that it might. There is a slight negative divergence there, but it's not from an overbought perspective. Overall context of the chart there, it's still bullish though. The 50 is sloping up, and the 200-day is still sloping up. From the Dow Jones, we're looking at the INDU, the Dow Jones Industrials, overbought, little hanging man candle, still technically within this pattern. Will it go higher? Will it go lower? It's very, very hard to determine at this particular point in time. What I do want to call out is the transports. The transports are also in this tight rising wedge type pattern, and just take note here of the weekly RSI, just how overbought this is. This could be a record. It's 79.54. Now, from a weekly perspective on this chart, I'm going to zoom out here in a moment, but from this chart, yes, it's all in bullish context. It's still within this channel. Everything looks somewhat fine. It is overextended tremendously on the RSI, but if you zoom out and you look, dating back to 2009, I circled these little pivot points here, these pink shaded circles. You can see it acted as support here, support here, support here. Then when we crack through it, it did act as resistance. And now we are right back up here at that level of resistance. And that's important to note because the transports and the industrials, it's part of Dow theory. So these have to move hand in hand. So if transports start getting, rejected here, perhaps we see the Dow Jones roll itself over too. We'll determine that as time progresses, but just very, very overextended readings, which makes me kind of question the fact, okay, is this actually a full-blown melt-up? It sure feels like it, but the unfortunate thing is you never know how far, a crack-up boom can go or a melt-up can really take us. IWM, the Russell 2000, this is the ETF, negative divergence here. There is something kind of interesting here. So we were up slightly on the week for the IWM, and it formed a nice little hammer candle here right at the 13-week EMA. Now, this has been some crazy price distribution for, multiple weeks here that we've been watching, but this green hammer candle with a lot of volume coming in, you know, pretty nice little volume bar here. That kind of makes me think, okay, maybe there's actually an opportunity here to go from the long perspective, especially when I take a look at the BKX. It's in this pennant sort of pattern, maybe bull pennant or symmetrical triangle right here. Now, this does look like it has the ability to break out. It broke out of these last 3 bars. So perhaps if we start taking off here, you know, the IWM might head higher too, because the IWM, 20% of its holdings are from the financials. So that's something to pay attention to here as the next week opens up. But from the BKX weekly perspective, this is more of a bearish point of view, right? We have, it's a period of consolidation, a lot of indecision type candles, overbought slightly, and then the price percent oscillator looks like it's about to do a bearish crossover here. So, you know, you can see the bullish perspective here, you can see the bearish perspective. So really you have to kind of find it, you know, an in-between and give the bulls the benefit of the doubt because they had more ideals in their favor, but you got to be cautious because the bears can just, you know, appear out of nowhere here given this environment. Let's take a quick look at gold. Indecision type candle on the weekly time frame still hasn't broke out of this flag pattern, but the price percent oscillator does look like it wants to do a bullish crossover. This is looking pretty good right now for the price of gold. So, you know, I don't want to jinx it or anything, but it looks good right now, but it looked good right over here too. So we'll watch that. Another good thing to note though is looking at the GDX or even the GDXJ. It did break out of its flag pattern, and the miners typically lead the way or lead the price of gold. You'll see just by pulling up those charts. Not all the time, but it does happen quite frequently. It did break out of this flag pattern. It got slightly rejected from the 50-day moving average. Bullish crossover already did take place, and this little candle right here is a little bit of a inverted hammer, so it does suggest that we might see weakness, but the breakout, you know, did take place already. I don't have volume on the chart. I should have put volume on the chart, so we'll continue to monitor this as well. Overall, we got to give the bulls still benefit of the doubt on this breakout, but we still have to recapture the 50-day moving average, so we'll pay attention to that. As far as a crude oil perspective goes, this one has been just kind of it's been hard to determine. Weekly perspective, it was bullish. It did a breakout of a 2-year trend line here. We came into an area of resistance that we mapped out, tagged it perfectly, headed lower, and we didn't quite reach this pink box here that I was thinking would be a good target area, but we might still very well reach it. Not this week, but the week prior looked like a very solid green candle, like it was going to start continuing this move. This week, though, down 1.66%, was seeing some weakness. It does suggest that, okay, actually we might head lower. Price percent oscillator did cross over bearish as well, too. So we'll continue to monitor how that develops. Here's the price of the USD, the dollar. Just big down week. That's a big red candle to the downside. Clearly closed below the 61.8% retracement level, and that really did help out the S&P 500. So you got to wonder, like I'm a believer that the dollar is going to be falling, but I kind of believe that the dollar will see you know, a big rally here, and we're not seeing it as of yet. It could be too early to determine that, but as the dollar falls, and it falls with just this. You know, a lot of force to the downside, it seems to be helping out various other assets. So, you know, you can see right here, as this broke out, the S&P 500 broke out, the dollar has been falling. So you got to wonder, okay, if the dollar keeps falling down and we start, you know, losing purchasing power in the dollar, meanwhile stocks keep continuing to rise, that seems to be a very tight correlation to monitor. So if we do see a spike in the dollar, I think that's going to put a lot of pressure here on the equities market. So just a tight correlation to really keep an eye on. All right, everybody. So now we're going to go into the power chart section, and I want to kind of walk you through my thought process here. So let's just go ahead and get into that. We're looking at the sectors right here, the S&P 500 from a weekly perspective. I just wanted to call out really quick, leading the way, real estate, health, and industrials and materials. Industrial and materials have, that I want to call out here, have been on that relative performance graph. So I'm going to bring that back up, and we've been discussing this on prior episodes, prior weeks, just looking at the relative strength. It's going from the bottom left to the top right leading category, which is the green. So we have XLB here and XLI here. So when I bring up the charts, we're going to be looking at these specific type of setups. So I believe we're going to be looking at materials, industrials, and then even financials and energy, because they are still leading in this category. Okay, so just to pay attention to, and then also just as a warning note, we did talk about XLP and then XLU. They are improving from a weekly perspective, and these are the defensive kind of players here that when you see the stock market like take a big nosedive, these ones from a relative performance pretty much always perform better than all the other sectors, so utilities and XLP. So just keep a close eye on these guys as they're just moving more into that leading category, because I do think if we start getting more into this improving and leading category with XLU and XLP, the market is probably going to be seeing some continued turbulence. Now, I just recently released my Sleeping Monster scan. This scan is what I used to find out this specific stock here. This was INVE, and it had a 35% move. So if you haven't watched this, watch it. But all of these stocks that we're going to go through right now just came from my Sleeping Monster scan. And if you don't know what the Sleeping Monster is, just watch the video, and I go into more detail as to why I call it the Sleeping Monster. So let's just go ahead and hop into the charts. The first one is from the materials. You can see Steel Dynamics here. It created this flag pattern, broke out, and now it's been consolidating very tightly. So this monster could be sleeping before a bigger move to the upside. I'm looking for a break above 52 to 53, that area of resistance, for a continued move higher. So we'll continue to monitor that and see how it develops. Just note that you always want to monitor risk. Like, you don't want to just have a stop loss way down here at 38. You want a stop loss below, this channel, because if it starts cracking below it, that could be the start of a bigger breakdown, all right? And if it starts cracking above it, then that could be the start of a bigger move. So you can either enter, when it breaks out on good volume, and then have a stop loss below basically the breakout point, because that can act as an area of support. That would make for the best risk versus reward, in my opinion. Or you can speculate and get in before it breaks out. Just note that, you'll get a better entry point, but you might not ever get a breakout. Okay, so, and then like I said, on all the other charts too, they are very overextended, so you got to just be bullishly cautious here and just make sure to monitor risk. It's okay to take small losses, just don't blow up an entire portfolio or put all your eggs in one basket here. You can get lucky, but you can also destroy a portfolio. I just don't find it to be worth it. Here's MOS. Mosaic, just stair-stepping up. You can see it consolidates, breaks out, consolidates, breaks out, consolidates, breaks out, consolidates. Perhaps we're going to get a breakout here soon. The price percent oscillator is kind of, it's still above 0, but it did do a bearish crossover. Volume's drying up right here, so perhaps on the breakout above 36, we can see some more increased volume. The overall context, though, is very bullish here. The 20 sloping up, the 50 is not on here, and the 200 is not on here, but they're both sloping up. And then you have the 5 and the 10 all both sloping up here too as well. So there's nice solid move here, just grinding higher and higher. I like this one, and this one from a weekly perspective also looks very good. So keep an eye on MOS. EMR, this is also just in this nice consolidation. The monster is sleeping right now. Will it wake up when it gets above 93? Look for high volume. If it does break above 93, you want that high volume to support it and that price percent oscillator to cross over. But just look at this move, just a bullish context. Now it's just trending sideways. So like I said on the previous chart, just make sure you have your stop loss below the 20-day moving average, or the previous little area of consolidation, whatever you feel comfortable with from a risk versus reward standpoint. Here's CLNY, another one that has been consolidating choppy here sideways. So we're looking for a break and close above $7. I do like this volume that's coming in, so this could be the early stages of a bigger move. This green candle that closed did close higher than pretty much this last few weeks of trading here, so that's a good sign so far, but we still have some resistance to get through. So this one could very well move here very shortly. Just make sure to monitor risk and make sure you pay attention to how many shares you're purchasing and what that looks like if it were to drop $1 or 50 cents or whatever. Here's Charles Schwab, SCHW. Now this goes back to the financials. If the financials start breaking out, that could be good. I do like this volume stepping up right here. We have a big patch of volume right here. Resistance looks like it's right around 68 to 69. Big green candle up 3.61%. That looks like a potential breakout candle right back above the 20-day moving average. So this could be the early start to Charles Schwab heading higher. So this monster could be very well waking up from its nap. Here's LNG. This is an energy stock. Energy was the weakest performing sector, but it still could be a very well sleeping monster here. This is a symmetrical triangle. You can see volume coming in, nice big green candle. I would say wait for a breakout of 75, and then potentially we can hit 77 and even possibly higher. But that's a $2 per share move if we get above that. So pay close attention to this one. Just note that this is also a high beta stock, so it moves very, very quickly. So you can, high risk, high reward, high risk. You can lose a lot as well. Here's BPMP. BPMP, I want to call out, just recently broke out of a very tight consolidation here, up 1.62% on the day, getting into that overbought territory, but not quite. Volume is supporting this move. Price percent oscillator is supporting this move. So this to me is the early stage breakout, and you didn't really miss it because it's not up, 10% right now. And we've seen when we get breakouts, it can move very quickly. So this could be the early stages. I like this one. I might be getting into this and just having a stop loss below the entry or the low of this previous day's candle to see how that goes. Here's PBFX. PBFX is another one to watch to get back above 15. Nice volume coming in on the day, and these previous couple of days have some good volume building up. Just note that it's in this very tight consolidation, so you want to see it start breaking out before entering in, and you want it to be confirmed with some good volume. This thing can really get moving if volume is supporting the breakout, so keep an eye on that one. CEQP, I want to call out, did break out of a falling wedge. Now it's breaking out of an ascending triangle. Perhaps the early stages. I do like the volume coming in here. Just make sure that you're having a stop loss because this can easily be a false breakout and then head lower, okay? That goes with all these charts. You got to be very careful with. And here's the last one, TGP. Very tight consolidation. I do like how, from this daily perspective, the moving averages are now in alignment. It goes from 5 to 10 to 20. So that could be the early stages, just like it was right here when it started cracking above. It started going on a nice big run here. Then we're just going kind of through this consolidation phase. Price percent oscillator looks like it's about to cross over. And like I said, the volume here looks good. So we might be catching the early stages of another leg up here in TK, which is ticker symbol TGP. All right, everybody, that's all I have for you on the weekly recap. Hope this helps you out go into the next trading week. See you guys all later.